Welcome to the September 12th, 2022 Advance Report for McGowan Group clients and NetWorthRadio.com listeners. I'm Spencer McGowan, President, McGowan Group Asset Management, a team of 10, the team that cares. We care about our clients, and as your financial weatherman, you'll see we've prepared another weekly fast-paced tour of the global financial markets designed to help you make great decisions in the year ahead. So we'll get started with the S&P 500. And I want to cover something that's been happening. You've heard about the Federal Reserve headlines. Federal Reserve has been on a relentless PR campaign to say we'll do whatever it takes to control inflation. Even the Cincinnati Fed president made the ridiculous statement that it's going to take higher unemployment and slower growth. So I guess on the unemployment side, she doesn't care if other people lose their jobs as long as she keeps her cushy Fed job. Well, we've had no fewer than 7 Federal Reserve presidents and governors come out with statements about how the Fed will do whatever it takes to control inflation. Never mind mentioning overregulation, bad energy policy, and massive fiscal spending, which they were complicit in. Why is the Fed so important this year? And what happens between now and the election? I have a prediction from my dad, Papa Dean, and we're going to cover that prediction. So, this is the S&P 500 during the relentless tightening campaign this year, minus 14% for the year, and something happened here that I want to cover first, and then what happened this week. Look at this little chart right here. By the way, these charts and graphs are posted at NetWorthRadio.com with our full podcast available at NetWorthRadio.com, where we give an extended discussion with Alex, Chief of Operations here at McGowan Group Asset Management. Look at this. So we have this decline mirrors this decline. What happened? Well, the financial markets don't like uncertainty. And the Federal Reserve came out here and said, we'll do whatever it takes to control inflation. What was missing from that statement? Oh, we're going to take rates to this level because we think that's enough for now. They didn't say anything like it. They just said, we'll do whatever it takes. And that's what happened here on June 15th, along with the massive inflation report for May. But we predicted something, that inflation during the month of in the month of July would come down. And it did. Now, that accounts for this rally here. Everybody's worried about inflation. Financial markets don't like the cost of capital going up because it causes the value of things to go down. It's just an equation. Well, here, what happened again? Federal Reserve, this is Jerome Powell after his Jackson Hole conference with all the elites. He came out and he said, oh, we'll do whatever it takes. Then all these other Fed governors went on a bizarre PR campaign. It's like every day another one pops off with the same thing. None of them said how high they think rates have to go. Financial markets don't like it. What happened this week? We're getting evidence that Tuesday's inflation report could actually be quite good, as July was. It was 0, by the way. And I'm going to give you some evidence of that as we go forward. Here's a prediction. Federal Reserve, before the election, based on their behavior so far, printing $4 trillion to accommodate all the spending, certainly understandable during lockdowns, but all through 2021, it makes no sense. Now they're saying, oh, inflation's the big worry. Well, what's intriguing is they don't mention deregulation or bad fiscal policy as the components of inflation. Well, in any case, by the election, based on their beholden status, they probably would like to come out so they can keep their jobs and say, we've got inflation under control. If they do that, Katie, bar the door. This was the June 15th low. This may have been the low from the Federal Reserve campaign that we see right here. And when we go forward, we're starting to see outperformance in the markets from special subcomponents. This is the top 10, bottom 10. We'll cover inflation in just a second. Newmont Gold. We're going to cover gold. Look at this, 33% down. So the last 90 days, top 10, bottom 10 out of the S&P. Who's performing, who's not? Baker Hughes and Halliburton. Oil went to 82 this week. Wow. You've got premium gas below $4 here in Dallas. Yet Sam's Club's like $3.50 for premium. Wow. Okay. And chemical giant Celanese, a bottom performer, minus 27. Newmont, by the way, down 33%. Hewlett Packard, Western Digital, the tech implosion seems to be continuing over the last 90 days. Here, we've got In-Phase Energy, solar, right? Constellation's in there too. Cardinal Health had a nice rebound. Regeneron Pharmaceuticals. Healthcare's been performing well. Our medical dividends, not those, but our medical dividends up nicely for the year, as is the energy infrastructure. Well, here you have evidence that the inflation report is also going to be good on Tuesday. And it's going to give the Federal Reserve more evidence that inflation is coming down. And I have some more evidence on that too. But lumber is down 64%, and it's actually down below the price, the white line that you see right here, well below last year. Lumber is. Housing market coming up in the next slide. Copper down 27% from its peak. Wheat is down 43%. If you've been hearing about food shortages, that's been in all the headlines. Why is wheat down 43% from the Ukrainian invasion high? And also, if we look at wheat right here on the green line, it's back to last year's price essentially. Wow, it doesn't look like a shortage there. Okay, these are the new homes for sale. How many months supply do we have at the current rate of sales? The rate of sales plummeted. The housing market contribution to inflation appears to be over. Got the evidence right here, thanks to Stephen Norris, who does the charts and graphs for this week. 11-month supply of new single-family houses. An 11-month supply. That's a 15-year record. That says housing inflation, at least temporarily, over, and maybe a lot longer. You've actually had price drops on the West Coast for a variety of reasons, including bad policy. Okay, here we go. This is Bitcoin. Remember, Fed's printing lots of money. Bitcoin is an alternate currency. It's a smart thing to do. It hit 70,000 back in November, so it's just a one-year chart. And it went below their support level this week, about 19,500, briefly went below that, and then spiked at the end of the week. What did it not do? It didn't work against an inflation hedge. It was a bad idea. Here's another bad idea for inflation. This is gold, but it's a 15-year chart. Down this year from a high above 2,000, fell as low as 1,717 per troy ounce this week. How's that doing with massive inflation? In fact, I go back to 2011, the last time that you were supposed to buy gold for inflation, and it was 1,900 per troy ounce. That is no cash flow, no appreciation from this point right here. So when you hear Bitcoin and gold are great for inflation, it's been a lousy year for both of them. And here at YouTube McGowan Group, the reason you subscribe and share it with your friends that like to talk about investing is because we uncover things that are not true. And if you can save some money, well, that's investing skill number one, is don't lose money in something stupid like a picture of an ape. Non-fungible tokens. Just had to throw that in. I'm Spencer McGowan, your financial weatherman. Thank you for tuning in, and we're grateful to have you here. Be sure to go to networthradio.com. Find out more about becoming a client of McGowan Group, because you can set your Zoom time or time to come down to the Crescent for your 1-hour brainstorming session. Thank you for tuning in to Net Worth Media today. And our efforts over the past 2 decades to educate clients and help clients make great decisions, that's the reason that we're here at YouTube McGowan Group, Apple Podcasts, Net Worth Radio, and networthradio.com. The Net Worth Media effort is designed to help you make great decisions and address value at risk of loss, fluctuation in the markets. Remember, if we talk about a security, doesn't make it a recommendation until you come down and get a plan from McGowan Group Asset Management, the team that cares. You can set a Zoom meeting or an in-office meeting at the Crescent, and we'll give you a written plan that encompasses what we believe to be the best allocations. This is a team of 10 devoted to you. That includes the research that you see each week from Reuters, from Bloomberg, and from the best sources. We always post links at networthradio.com for what we believe can help you make great decisions, the research that comes up. Now, the Net Worth Media effort is also designed to address cycles in the market, value at risk of loss. At networthradio.com, you can get the ADV form that shows, yes, we're a fiduciary, a registered investment advisor. It covers the costs of hiring our team to help you in the future ahead. It really helps to have an expert team on your side that you can reach by phone, email, and of course, a team that's here for you every week to address what's going on in the markets, because anxiety can often lead investors to make decisions that are either dangerous, chasing things, or selling things when they shouldn't. And that's a big part of our planning effort at McGowan Group Asset Management. Thank you for tuning in, and we look forward to serving you and your family in the years ahead.